Okay. Hola, soy Luisa, una periodista que abarca
Who works with agriculture, technology, and investment. And it is really good to be here today. And thank you very much to YieldLab and the investment agency for inviting me today. Thank you, but I need to speak English.
So it's been really great this morning to hear from various different ag tech startups like Benson Hill Biosystems, Indigo, and Grain Chain. But how have they got to where they are today? How have they had the support to create those businesses in the agriculture sector and have relative success? And so that is what we're going to speak about today, and what we like to call a startup ecosystem. So thinking about what is a startup ecosystem, a lot of you probably don't know what that phrase is. It's something we talk about a lot in the industry. And I'm going to ask the panelists to tell me what they think a startup ecosystem is. But loosely, it involves various different players, including entrepreneurs, investors, governments, and of course, the end customer, which in the case of ag tech is the farmers. So I'm going to start by talking a bit more about the investors, because they are very, very important in this space. And you will have heard from some of the startups like Indigo, they've raised hundreds of millions of dollars. So who are these investors, and how can entrepreneurs find them? So I'm going to ask Philippe, firstly, to introduce himself a little bit, and then tell us, who are the investors for ag tech? What is venture capital?
Thank you, Louisa. So when we talk about the ecosystem, I think it's important to realize that just as agriculture is very much determined culturally by location and where operators are active, the same is true for the ecosystem of investors. 10 years ago, we launched an event in New York that now takes place in New York, London, and Tokyo, where we bring institutional investors, that is pension funds, university endowments, insurance companies, family offices, and high net worth individuals that expressed interest and have an interest in investing in the ag sector. And what prompted that was the financial crisis of 2008, when investors were looking for opportunities to preserve capital and to invest in a sector that was anti-cyclical with the paper markets, with the financial markets. They had been investing in timberland for over 30 years, and they saw farmland as a new asset class because of the food crisis and food rises in commodity prices in the mid-2000s as an opportunity. And so for the last 10 years, we've seen increased interest on the part of investors in agriculture in general. This was preceded by interest in farmland, but has since grown to include private equity and operating companies that are servicing or taking product, biomass from agricultural production and adding value to them. And within the last 5 years, in ag tech. And one of the drivers that we see for ag tech is this, institutional capital coming in to the sector that is looking for ways to improve productivity as well as mitigate their risk for their investments. And this complements, of course, strategic or corporate entities that have been involved in agriculture all along, what we would call the legacy companies that have set up venture capital funds. But what I would say is that the ecosystem is very different in different parts of the world. In the United States, it's driven largely, and I'm speaking specifically on ag tech, by the corporate venture funds as well as independent venture capital firms. In Europe, we see more interest on the part of family offices and high net worth individuals and impact investors that are allocating money into the sector. And in the case of Canada, we see a mix of both the private sector, venture funds, as well as the government of Canada being very aggressive in supporting investments in agriculture. In Asia, it tends to be a little bit more obscure, less transparent, and I would say that a lot of new developments in ag technology are really being undertaken by some of the large trading companies, particularly in Japan. We see a lot of the Japanese trading houses getting involved in these ventures. So and so of course in Latin America, we see a kind of a mixed model, but probably more similar to what we see in the United States in terms of venture capital funds, raising funds to invest in early stage ag tech.
Yeah, so now can I ask Marielle, can you explain what is venture capital, what is the venture capital market like across Latin America? How does it compare in the US? And also tell us a bit about Inter-American Development Bank and what you're doing there.
Thanks. Bueno, voy a hablar en español.
Okay, I will speak in English. I work in the Inter-American Development Bank. We have the Multilateral Investment Fund. We have been working for quite a while. We work strengthening ecosystems in general. In this case, we have been working for more than 20 years. Investing in venture capital funds, trying to strengthen the ecosystem in Latin America. And when I have to think about this ecosystem in general, I can think of heterogeneous. It's a mixed model. It's a mixed system. We have 26 countries in the region, and they are very different. There are some countries that have, like Mexico, Brazil, Chile, and Colombia, who are improving, and some others are a bit behind. But it is really heterogeneous, but it follows the model from the United States, but it presents some gaps, especially when we're trying to find investors in Series A. And it is an ecosystem in which we are working and we have to strengthen.
Coming from a slightly different place to everyone else on this panel, in that you have an agriculture background. Can you tell us, when did you first interact with venture capital investors, and what were your first impressions? And what do you understand venture capital to be?
Yeah, so my background, I grew up in the farming industry, knew nothing about investors, startups, much more than anybody else about technology. I was reselling technologies to farmers based off of demand for about 4 years. And in early 2014, one event led to another locally that pushed me to an event that was happening in Silicon Valley. Regardless that I lived and grew up an hour from Silicon Valley, I knew nothing about venture capital. I don't even think that I knew what the word meant. And so, 2014, there was a lot of excitement from the Climate Corp acquisition by Monsanto. And so, as Silicon Valley does, they got excited about this opportunity that agriculture could actually potentially make some money. And as I've learned more, at first I was pretty afraid of venture capitalists. You hear I mentioned that there's sharks a couple days ago. That's what you hear from people. There's good stories, there's bad stories. As I've learned more, I work very closely with a number of VC firms at this point, and they're a very intricate part of any industry. I think there's some interesting things on their typical model and how it works and the time frames that they look at compared to how it needs to work in agriculture to have success. But I think that it's important. We're starting to see more industry investment into somewhat typical venture capital firms, and they're realizing that where venture capital would typically go to academia, go to the universities to talk to subject matter experts, they're starting to realize that you have to actually talk to farmers and not just academia, because in the universities it's a lot of science and research, but ag technology has been stuck in a place that we can prove that something works on 20 hectares, but how do you bring it to 1,000 hectares or more, scaling it from a science and research project to large-scale agriculture is hard. So I've seen some big changes in the venture capital world, how they look at it, and they're realizing that you do need a subject matter expert in ag tech isn't necessarily their traditional kind of resources. It's boots on the ground, it's farmers. Everything I look at it from how is this going to benefit a farmer? How is it going to benefit, how is it going to be supported? Because of great technology with a little support. And if a farmer goes to rely on a technology and it breaks in the middle of the night and they can't get a hold of anybody, that technology is going to be thrown in the trash and not used again. And so it's kind of reshaping. We're starting to see the industry from an investor standpoint reshape, as well as not only corporate capital from within the ag industry is getting more organized, but we're also starting to see farmers getting organized or investing in startups or into venture capital. So it's a evolving model that I think is finally starting to go in the right direction.
Yeah, and the good news for the ag tech ecosystem is that there are now about 30 dedicated venture capital funds that only look at agriculture startups. So talking about that expertise piece that Aaron mentioned, you have some educated investors looking at it. But last year, there was over $4 billion of venture capital funding went to agriculture startups. And there's no way that just 30 funds could have covered all that. So you do have a lot of investment from non-agriculture specific investors. And there's a big educational learning curve there. So I'm wondering, Philippe, you've looked at investing in agriculture. How have investors educated themselves about agriculture, and what tools are there for them to learn? You run a series of conferences. That's one way. What else can you say about that?
Well, yeah, I mean, I think we've seen the investor class over the last 10 years become much more sophisticated. We see that in terms of the questions that are asked at our conferences that we run in New York, London, and Tokyo. And we see the investors starting to focus on certain channels within the value chain where they're getting educated and becoming better acquainted with the opportunities and the risks. We've seen increased amounts of capital coming into the sector, and what we've also seen recently is increased sophistications in business models, that there are an experimentation with different business models as to how the capital is being deployed. And I'm talking not just about ag tech, but in general throughout the ag value chain. And we see a lot of attempts and initiatives on the part of institutional investors, financial investors, to collaborate and partner with strategic investors, those are companies that are in the ag sector, to collaborate for offtake agreements and to develop systems that will bring products that are needed by the marketplace. Mm-hmm. So we continue to see experimentation in the sector, and it hasn't abated. We obviously over the last 2 to 3 years, last 3 to 4 years, with the flattening of commodity prices and erosion of prices, we've seen a softening of demand for farmland, investment in farmland. But what's interesting about that is this past April in New York, which was the 10th anniversary of our event, we had a record attendance at our event, and anecdotally noticed that there are a lot of funds going out to raise capital, because if you buy into the thesis that agriculture is an attractive opportunity over the long term, this softening of prices creates a buying opportunity for investors. And I think that's also supportive of ag tech, because with increased capital coming in for farmland and also consolidation of operations at the farmland level, we think that ag tech is going to continue to be in demand, and new developments to improve productivity. And the other factor that we could talk about are consumer trends. that are putting great pressure on the system for clean food in the United States, which isn't the case elsewhere so much, but there's a great demand for organic products. And so we see continuing pressures on the land, along with climate change, that's creating opportunities for AgTech to provide solutions.
Yeah, absolutely. Aaron, how have you seen investors try to educate themselves about the sector, and what do you think is the best approach for a new venture capital investor to understand agriculture and how technology can have an impact?
So there's a number of different ways that investors are educating themselves. There's a number of events that are held. Investors have been mostly sticking to a model where they want to look at companies that are based in the U.S. and working in the U.S. Over the last year to year and a half, I'm starting to see more international people being interested in more international deals and companies that are not only from international working in the U.S. but also building international businesses. So I think that that there's a number of different ways. Events is a great way. After you go to 2 or 3 events, sometimes it turns into something where it's more of a networking situation instead of an education situation. So what we're looking at is how do you kind of take the next step into kind of diving into what's going on. And so I think there's a couple things that there's grower organizations that are starting to get more involved in technology to organize their growers to kind of be what we've called snake oil committees, or basically start looking at different technologies and opportunities in different sectors, and to help educate and bring the growers to help validate ideas that startups have, which at the end of the day will help investors have more confidence. So I think that moving forward, we're going to see, as I mentioned earlier, more and more grower involvement in investing, especially in early stages. And as growers get educated about the startup world and the investment world that they're not necessarily used to, it's opening doors. And so if you have a startup that has raised money more from industry or from a VC that's got more industry money into it instead of a strict kind of typical venture capital firm, you're going to have more opportunities for follow-on investment because it's kind of already being validated by people from the industry. And I think that's another interesting point in ag technology and the investment sector is that we have very specific needs, so we should build very specific solutions to those needs. It's not a consumer product. It's not something that we're going to build it and see if people like it. We can really, when I started going to Silicon Valley, and I still hear it today, I have people come to me and say, we've built a solution, we're looking for a problem. But in agriculture, we have very specific problems. And so, the education part is hard because farmers have a job to do. You have to put a crop in the ground, you have to grow it, and you have to get it out of the ground and then hope that you can make some money at some point throughout the year. And so anything to do with ag technology, whether it's working with a startup or an investor to help educate them, is potentially taking away from your core business. There's an important change that I really help facilitate, and I think is important for the entire industry, that farmers need to start looking at technology and helping ag startups and investors understand it as a way to not only to have a technology to help their core business and make a little more money or have a competitive edge, but to look at it as an opportunity to take 5% of the money that you have as an investment in your operation or in other types of investments, 5 or 10%, take that and put it into a couple of startups or venture capital funds that you work closely with. Now the farmer has an incentive to spend time with that startup, with that venture capital organization, to help them learn the specifics of what's going to be successful in that organization. Besides that, we're seeing some organization throughout some of the universities kind of doing deeper dives into technology. And I've just, over the last couple weeks, decided that we're going to put an event together that's built for investors and for startups, especially internationally, to understand the specialty market. So there's a lot of things. We also have to separate. I think it's important for an investor to separate if they're concentrating and their core understanding is in broad-based row crops or specialty. There's some crossover that can happen in the technologies, but really a startup and I think a venture capital firm has to look at concentrating on a special crop and a special area to begin with. And so we're starting to put an event together that's going to be 100% 100% growers and industry people on the stage, not necessarily the owners, but people that if we're irrigating, people that are turning on and off valves, pest control advisors, agronomists, so people that are actually doing stuff day to day, because I feel like we have a lot of events that are kind of Ag Tech 101, which is really important to move the industry forward as a whole. But those of us that have been to a majority of the events out there, travel around, it's great networking, but we want to kind of take the next step of how do you dive into this on a large scale, because we do diligence for a lot of companies, for a lot of investors and farmers trying to understand stuff. So it's kind of how do we move this industry to the next step of education.
Yeah, and Marielle, how does what your organization, how are you looking at agriculture as an investment destination, and what have been some of the biggest challenges for you when you've been looking at startups and working out whether you want to invest or not?
As I said before, we work with venture capital in general, but one of our strategies or lines of investments is technologies, always working close to the farmers. So we work with extension programs, and this is one of the phases. And as he was saying, we have to work a lot with farmers because one of the biggest challenges is the adoption of technologies. Regarding venture capitals, what we have done so far is to work with over 80 funds, and we aimed at densifying the system, the ecosystem. So I'll start from the general, and then I'll go down to the specifics. So last year, for example, we closed deals for over $1 billion, and that multiplied or doubled the deals, the closure of deals in Latin America, but only 70% of the deals were in ag tech deals. So back to the first question, this lack of density and these gaps we have, particularly for startups, it's very hard to get funding, generally speaking, right? This is just a quick survey through the IDB. We see that entrepreneurs raise their own funds from France, or when they have a problem, they have to design a solution. And then as they move along, as they evolve, well, they get to an incubation or seed capital. This means that we have some gaps and we have to work on them. So we're working on two aspects, technical consultancy, we work together with the civil society in order to strengthen demand and to bring demand to entrepreneurs. On the other hand, we're also working on funding and incubators, accelerators, and we're also working with venture capital funds. We always try to. We're a sort of a lab. We're the IDB lab, so we aim at working with innovative sectors such as agtag, for example, traceability. And also in Peru, we're working with rice farmers in Colombia. Another possible project with Acrea to bring demand of farmers to the entrepreneur world and strengthen the local ecosystem. We work with Trifinio in the cafe industry. So that young people remain in the farms, working with precision technology. The menu is quite big. We have this availability and flexibility to take risks that can be later escalated at a policy level.
I think, to follow up on these comments, I think there are 3 hurdles that investors need to understand and that we see as major hurdles for them in terms of allocating capital into the sector, and it's part of the learning curve. One, and this is a big one, particularly for agtech, not so much for farmland investing, but for agtech, because a lot of the venture capitalists coming into this, not all, but some, particularly in the beginning, didn't have a background in agriculture. They really do not understand the cycle times in agriculture. The cycle times for crops, seasons, and it's they just, if they're involved in pharmaceuticals, that has nothing to do with cycle times in the year, So biology is a big issue for them. The second one is, when they think about adoption of technology, what they don't understand culturally, and this applies around the world, is that an operator, whether or not he's gotten into the business, or usually the operator it's a family business that's been in the family, the land, for so many generations. In Europe, longer. Here in the United States and Argentina, fewer generations. But they have 30 years, 30 chances to try something out or to make a mistake. And when you make a mistake, you're not sure because of climate whether you're going to be able to recuperate well the next year. So there's a risk in terms of the adoption of that technology on the part of the producer. Thirdly, and I've sold products to farmers in Spain and France and have worked on projects in South America, but I can tell you, and you well know, if you make a mistake with the farmer, they remember it. Not only do they remember it, they tell their children about it and they tell their grandchildren about it. So for any brand, they have to be very careful about where they put their foot, because they could really have problems down the road. And then thirdly, and one of the big challenges for the industry, is that it is a very complex system. I mean, you have to understand how all the pieces, how all the participants fit together. And every participant in the value chain needs to have profit in the transaction, in the chain, supply chain. Otherwise, that supply chain's not going to be sustainable over the long term. So those are what we see as the big challenges for investors coming in and allocating capital. Now, the ones who spend their time and invest the time to learn about it see opportunities. There are lots of opportunities, but it does take it's a fairly steep learning curve.
Mm-hmm. Absolutely. Okay, so now we've covered the investors just about. What about the entrepreneurs? Who are the entrepreneurs? Where are they coming from? Philippe touched on earlier some of the broader global trends that are pulling people into this space, such as the need for environmental awareness, consumer desires for sustainable foods and clean food brands, demand for organics. So just bearing that sort of in mind, where are you seeing entrepreneurs coming from, Marielle, who are now keen to look at agriculture? Are they coming from the food and agriculture industry? Are they coming from a technology background? Are they farmers? You know, what's the mix?
In América
In Latin American, entrepreneurs are fairly young. They don't have more than 5 years in average. This is a difference, probably, in this area, and they have mixed backgrounds that we have supported from. They come from the agricultural background, but also from the technology sector. As regards number of, we have around 250 companies, startups, which are getting support, economic support. But this shows how new this is, how young this ecosystem is. This system is really, really young in Latin America.
Entrepreneurs coming from. I mean, you're an entrepreneur yourself, and you've launched a few startups. You know, tell me more about some of the entrepreneurs you've seen.
So I think when you look at the world ecosystem in ag tech, it's probably where you see the most diversity. In the US, I would probably say 90+% of the entrepreneurs are not from agriculture, which is really frustrating for me. I came from agriculture to learn technology, learn investment, but most people in agriculture are very involved in agriculture, and it's a multi-generational thing. And I've actually had conversations with people on this trip about, you know, I really like agriculture, I'd like to do something, but my dad, my grandfather, we've been farming for multiple generations, they want me to farm. And there's some things that have changed in farming also. And as I've learned here with fluctuations in the economy, farmers are not just farmers that put seed in the ground, grow a crop, and harvest it. You're business people, you're financial people, and so the whole industry is changing worldwide, and I think that it's important. So going back to the US, majority of startups come from the tech world. It's better now, but I had a lot of startups that would come to me and say, you know, I watched all this news saying that we waste all this water in California, and I worked for Google for 20 years, and now, you know, I know how to build sensors, I know how to do this, I'm going to fix all the farmers' problems. And I go, wait a minute, you know, and they already raised $1 million or a couple $1 million to do it. I go, you have a lot to learn, you're just going to waste a lot of money. They're with the events and some of the structure that's there, U.S. entrepreneurs are more educated and going into it a little bit slower and kind of working through ecosystems and, like I said, some of the grower organizations. When I travel around other parts of the world, especially in South America and Asia, I see probably at least half or more of the entrepreneurs are from agriculture. At the end of the day, farmers are the most innovative people in the world. You're constantly fixing stuff that's broken, figuring out how to do new ways to improve things across your organization. And I think that's follows through with technology. So I think that in the US, again, we don't, you'll have a whole group of founders, and the first 5 or 10 people in a company, none of them have a background in agriculture. And when I travel outside of the US, if not the first 1 or 2 founders, if they're not from agriculture, the first 3 or 4 people they brought in, an agronomist or people that they knew. So it's more, it's a lot more integrated with technology, which I think will have quicker cycle times, quicker opportunities, and quicker success. So that's one of the biggest things that I see, is that you have a lot more people from agriculture going into technology in South America and Asia than we do anywhere else in the world.
Interesting. And thinking about, well, any of the markets really, Philippe, that you cover, what are some of the trends that are informing entrepreneurs' decision to get into this sector? What are some of the passions that are driving their decisions?
Well, I think the climate change is a big one, and the recognition that the climate is changing, whether we call it global warming or in the United States we have a political debate about that. It's highly politicized. but even people in the agricultural industry, I think there's general consensus that we are facing changes. And just as an example, in Canada, the Manitoba and Saskatchewan, the production of soybeans, which is a region where they historically didn't produce soybeans, has grown dramatically to the point that it's creating problems or opportunities or challenges for the industry, because how do you get the soybeans to the market? That it was a product that wasn't grown there before, and so there's a debate within Canada as to how best to take advantage of this change in what they have. So that creates opportunities for people who might want to get involved in logistics and invest in downstream activities. But I think climate change is a big one. I think consumer trends is creating opportunities for investors. You look at aquaculture. Aquaculture is probably seafood. Fish protein is the most efficient animal protein to produce. So we see activities in terms of developing new traits of soybeans, both on the protein profile of the meal, of the profile of the protein in the seed, as well as the oil, to be able to mimic fish meal. That's creating opportunities. Not enough is discussed on that matter, but so I think a lot of new consumer trends are driving entrepreneurs into the sector, where they see unmet need and an opportunity to bring change and new technology to address it.
And Marielle, what is the entrepreneur ecosystem like in Latin America? Are there a shortage of ag tech entrepreneurs, and are you wanting to see more opportunities, and maybe how can we encourage more young, clever people to come into this space?
Bueno, de la cifra que di de los 260
from the 260, this has been doubled, so it is growing. And I think that as long as as Philippe said, climate change is a new way that is encouraging new solutions, and there's a new generation which is available which wants to work with technologies. So more entrepreneurs will start working, and also the systems are growing. So there should be more effective financial support.
One thing that's changed, I mean, it was presented in previous presentations by Benson Hill and Indigo, and I know this from the work I do. I work with experts and colleagues around the world virtually. 20 years ago, that wouldn't have been possible. I mean, the internet, Skype. Unfortunately, I end up working around the clock because I'm working with clients in Asia or in Europe, and so it never stops. You're on the run all the time, but it does create opportunities for people to connect and for networks to be created that aren't limited by time and space. And so that really is a big change, I think. And to get back to Aaron's point, I think that's very true, that because of the culture of venture capital in the United States, it tends to have been driven by finance. And it is a form of finance, obviously. But what we see is that in Europe and in other parts of the world, teams are usually put together which have cross-fertilization of experiences and backgrounds. And those are typically the ones we see being successful over the long term.
Yeah, absolutely. And if you've got entrepreneurs coming from different disciplines, computer science maybe, or satellite imagery is their background, they're coming into agriculture. As Aaron mentioned, there's often a disconnect with what they want to create in terms of a product and what farmers want. And so something I think we're noticing in the US, and I think this is an opportunity for Argentina and the ecosystem you're building here, is that organizations are realizing that interaction with the farmer needs to increase. I mean, it sounds crazy that there wasn't that interaction before, but there wasn't. And so what I'd love to talk to you guys now about is how can you get entrepreneurs interacting more with farmers and answering their needs. They have several needs, and not all of the startups available are actually trying to answer them. Anyone can go first.
Yeah, I think that it's important as a farmer to look at the future. There's two things that are important. One, you have to make money this year so you have a future. I understand that. But the new generation is more efficient in a lot of ways in managing what's happening, as well as we have an opportunity to allow someone else to come in and maybe manage the financial and the day-to-day parts of the farming operation, and allow the next generation, my generation, to kind of explore how do we grow this. We're seeing this quite a bit in Midwest and the West Coast as well, that farming operations that have been around for 1, 2, 3 generations in the last 5 or 10 years have grown by 5 or 10 times. And that's because the next generation's coming in excited, looking at technologies, and really kind of wanting to do something a little bit different. And so I think if you, the first step is kind of giving the people in your organization the opportunity to look at how can we improve this business, how can we how can we have more competitive edge over not only the crop that we grow, but over a worldwide economy. So I think as a farmer starting, or anyone from the ag industry, starting to look at your organization as, this is my core business. This is what pays the bills. This is how we make sure that we continue for generations. But if we dedicate a couple people a little bit of time to building a technology ecosystem and a technology direction, it's a whole new business that farmers have, I think, a larger opportunity to have success financially from agriculture than a traditional venture capitalist does, because you know everything that you need better than anybody else will. And it's much easier. I found, like I said, 5 years ago, I never went to Silicon Valley. Now I travel all over the world to tech hubs and understanding not only what technologists do, but what farmers do around the world as well. But in 5 years, I've learned a very significant amount around startups, technology, and investment. For somebody to come from the investment or technology world and spend 5 years immersed in agriculture, they will still only know 10% of what a generational farmer, or even farmer's son or daughter is going to know. And so it's a lot easier to learn the other pieces than come and learn farming. And so there's a huge value proposition. I actually think that I know that farmers can make more money by being involved in technology over the next 10 years than farming the way that they have, both integrating it into their organization and helping organize their friends, the grower organizations. The hardest part, I think, right now is there's some organizations starting to do it, is building a path, building a map of these are the steps that you take to understand technology and where it best fits. So, anyways.
Yeah, I mean, and a difference between the US market and Latin American market is that the average age of farmers in the US is at nearly 60 years old, I think. Whereas here, I'm hearing, a lot that it's a much younger population of farmers here who are much more technology savvy. So how is that playing into how farmers are interacting with entrepreneurs and startups?
Sí, es cierto. América Latina tiene un bonus demográfico, ¿no? Y realmente
That's right. In Latin America, we have this a very large young population, and here, the adoption of technologies, we have seen this in a long history. I think that there are two challenges here. First, connectivity, the infrastructure that is needed, because if there's no good connectivity in our country, it's not even, for example, and it's not cheap. so they are not adopted because it's expensive. In many places, we still have satellite internet, and the price of devices that is also high. They should be more available. I think that should be looked at, and it's been worked. I mean, Argentina has currently has a digital strategy, and connectivity is one of their pillars, the pillars of their strategy. And secondly, what Aaron was saying, farmers know what the problems are, but we need to work from the to educate farmers, to develop extension and education programs, not only to detect the problems, to identify the problems, but to work on the problem, to be more connected in order to be able to adopt technologies.
I was just going to add to that. I think, Argentina, it's an interesting situation because I think Argentina has a real opportunity here in general when it comes to ag tech and developing new technologies. Because of maybe, the situation that wasn't maybe positive in the past, but you always have to look for challenges like that create opportunities. And I think at this point in time, Argentina has a great opportunity really to become a leader in this field, not the only leader in the world, but I think there's real opportunity given the density of agricultural production in Argentina and also the cultural affinity for agriculture to really take the next step. In the U.S., agriculture, farmers account for less than 2% of the population, and it's shrinking. And it's shrinking because of scale, and it's also shrinking because of lifestyle and whatever. But not only, I know there's a great interest, and we've talked about this week. Aaron has mentioned it, that America, the United States, not the mecca for ag tech necessarily. And one of the things that's not really well understood and talked about, and we've picked this up in research that we've done, is that there's increasing capital, institutional capital, going into Africa to develop a production in Africa for import substitution, and because of the growing urbanization in that country and growing middle classes, not country, the continent, in various countries in the continent. And of course, Africa is comprised of a lot of, 45 different countries, so there are more opportunities in some than others. But we see great opportunity in Africa for adopting new ag tech to really take advantage of productivity increases. And that's what's driving capital in those countries, is because they see opportunities for very important and attractive yield or productivity increases of 3 to 5% a year, which you just won't see in the United States. I think that Argentina can be a leader in this field, not only in terms of developing new technologies that can be applied in some of the developed markets, but I think when you look at Africa, it's going to be the fastest growing continent in terms of population, fastest growing demand for protein after what we've seen with China over the last 10 years. So I think it's a really attractive opportunity to seek other places to adopt and transfer that technology.
Yeah, absolutely. And at Ag Funder, we also have an investment arm, and several of our investments are actually from markets like Australia and Brazil, non-US markets. And what we've noticed is these startups do really well creating solutions for their individual founding market and then springboarding to markets like the US. And they're actually almost having more success than startups that were founded in the US because it's such a challenging market. And I know, Aaron, we've talked about that a bit earlier. Can you sort of elaborate on why you think startups based here, have that opportunity to springboard to bigger markets too? What is it about, growing a startup in Argentina?
I had this discussion right before I came in the room, and it's the reason that I'm here today. Everybody thinks that California is where you need to go for ag technology as a startup if you're in specialty crops. If you're in broad-based row crops, corn and soy, You need to go to St. Louis or Illinois. But the reality is there may be more money, there may be more investors, but there's a lot more competition. So, and you're going to a place that you may not speak the language, you probably don't know more than a couple of people. Everything's different. And because there's a lot more competition for money, and people have been talking to growers for a lot longer, it's harder to get into a door. So I really, I think that it's more important for a company to build their ecosystem where they're at. It's cheaper to develop here from a technology standpoint. You know people, and so you can work through your networks. Farming is the largest, I think, one of the largest relationship-based businesses still in the world, and so if you know a couple people in farming, you can work through those relationships to build your organization and build the opportunity in your hometown. And so what I concentrate on at this point is finding technologies like Luisa mentioned. In the last couple of years, we're seeing investors invest outside of the U.S. and not say, unless you're downtown San Francisco, we're not going to put money into you. That's what we've heard for a long time. But so I'm building networks in Asia and also in Latin America here with farmers, with industry people that understand that there's an opportunity moving forward. So I met a gentleman, Federico Meyer, who's here, and we've had a lot of the same views. He found me 3 years ago, and I've hosted a couple hundred groups of Argentine farmers to Silicon Valley, and so I've been able to learn a lot remotely without coming here. And so since we have conversations, I have partners in Peru and Colombia as well. We have conversations on a monthly basis or more often talking about what we're seeing, challenges, opportunities. And so it's taken a couple years, but they've started Club AgTech here in Argentina, which is helping organize the ecosystem, working with some of the accelerators, incubators, large farmers, small farmers, putting that ecosystem together. I've been doing that for years in the US, and we're doing it in Asia also. So it really kind of, I guess, brings part of our conversation together on how do you make sure that people don't just get excited about things. We see, I call ag tech the Hollywood of agriculture. People get really excited about what's going on, want to make a quick dollar, think that it's exciting, but at the end of the day, a lot of the time it's smoke and mirrors. There's a lot of marketing, publicity, things to kind of make us feel good inside, but I look at everything, unless there's a real value and a direction forward, I'm tired of talking about things. So anyways, I think there's developing ecosystems, and wherever you're at, find one or two people in ag technology, and they should be able to connect you with anybody in the ecosystem. It's small enough. There's, maybe in the world there's a couple hundred people that are very immersed in it day to day. There's startups, there's investors, there's a lot of people that play in it, but those of us that are 110% in for the long haul, there's very few of us. So, but if you work through a network, you can utilize your local resources, build here, and then when it comes time, you built a network around you. You know the 3 or 4 people to talk to when you want to expand into another area. It may not be the U.S., it may be Eastern Europe, it may be Asia. So, it's important to take your time, build your product, have the success here, and then expand from there.
Yeah. And just to finish off, Marielle, we heard earlier this morning, there's been several government officials who are now putting a focus on ag tech in Argentina and want to foster and grow this ecosystem here. What role do you think government can have or should have in helping foster this ecosystem in Argentina and other Latin American countries?
Sí,
I think that I'll go back to the ecosystems issue, but also thinking about the incentives. No ecosystems can be developed without the support of incentives or subsidies. Mariano Meyer from the Ministry of Production discussed the different policies and the regulatory framework that is being implemented, that will actually, get to a turning point. And I think that on the one hand, since 2000, we've seen the development of science and technology research. The academia is being involved and the funding of technological institutions. And then the strengthening with funding seed capitals, incubators, accelerators, and also a regulatory framework that is supporting the whole system, and AgTech that is a leading sector. And I think that all of the conditions are there, so we probably needed this regulatory support that I think is on the way. And I think that one of the challenges has to do with connectivity, but it is on the agenda already. So the conditions should be ready so that this turning point that my colleagues talked about before will actually continue this path, and then we'll be achieving the full potential.
Excellent. Okay. Well, I don't know if we had any questions from the audience, but we haven't got the iPad here. So if anyone wants to ask any of our panelists later, you can catch them at lunch. I know it's lunchtime now. So thank you very much to the panelists, and thanks all for listening. Thanks.